All right, let's get a move on and connect with the management of Ashok Leyland then. And we've got Mr. Nitin Seth, COO at the company, to talk a little bit about the LCV lead that the company is witnessing. Thank you so much for taking time out. Now, we have definitely seen a pickup in the LCVs, and that's played a significant role in the volume recovery for the company as well as for the industry overall. What are the factors that are fueling this demand, and do you think that this kind of a run rate can sustain?
Yeah, thank you. I think one of the things which happened post opening up, which was in August, September, the e-commerce boom, because people were locked down at their homes because of the pandemic. So clearly e-commerce started the way. The booming recovery started with e-commerce delivering goods at your home, number one. Number two, the consumption, because since there was economy was running because of the slowdown, because of the pandemic, people started to consume more. Therefore, FMCG goods, the stores were need to be filled up. There was a panic buying of consumption goods at the stores. The daily needs of vegetable, water bottles, etc. good up. So clearly, the first 3 or 4 months of the September to November period happened to be very, very high on e-commerce and the festival time e-commerce sales and the consumption good. Post November, the industry started to open up. The small scale and the medium scale industry, which were not running to full capacity in the first 3 months after opening from August to October, started to move the goods because the industry started to demand. And the industry, which was on a slowdown mode in the first 6 months, suddenly the cranking up happened and the people and the workers started to return to the factory. Therefore, the small goods between the small SMSME and the MSME, the good movement started to happen. So clearly 2 phases, e-commerce continued to boom, consumption is quite strong, and last mile, I'll say small scale and medium scale industry movement with the LCV. All these are very heavy users of light commercial vehicle. And above all, the interest rate is at the lowest point. Therefore, the loans available are quite cheap, and low interest rate will always favors LCV market.
Okay, Mr. Seth, in LCVs, the company has a renewed focus with the launch of the new platform, that's Phoenix, and the model as well, that's Bada Dost. It was in September 20 that this was launched. What has been the response so far?
I think for next 1 year for sure, because people will continue to consume and the habits have changed, and I'm sure e-commerce and consumption should drive growth next year. The only negative points it might happen, if interest rate goes up, it might be a dampener. If interest rate doesn't go up, I think LCV should do quite well next year as well.
Okay. Are you witnessing any market share gains on the back of a renewed focus on the LCV segment, market share, volume, and are you also looking to further strengthen this part of the portfolio as well?
I think Ashok Leyland has been quite a late entrant player into the LCV segment with limited products. Before Bada Dost came, Ashok Leyland was only playing in 34% of the huge LCV market. Just to give you a perspective, last year LCV market is close to 450,000 vehicles. Now, we are only playing in 34% of the market. With Bada Dost coming in and with the full range of Bada Dost, which is called Phoenix as a platform, over the next 1.5 to 2 years, we should be playing in 50% of the market. India is a growing market where LCV plays 70% of the commercial vehicle market in India's light commercial vehicle. Company wants to attack most of the market as we go forward over the next 4 to 5 years. So definitely from 34% play in the LCV, we should be close to 65 to 70% play in the next 4 to 5 years. You will see a lot of launch of products from Ashok Leyland in the next 5 years on LCV platform, because market itself is huge. 70% of the market by volume in India is LCV. So we have been missing out this play for multiple reasons. Hopefully, from now for next 5 years, you should see Ashok Leyland being quite aggressive on light commercial vehicle market.
And is there scope for further expansion of your market share in the addressable segment?
One of the platforms which will be doing very well on going forward is Phoenix as a platform. See, Bada Dost is the first product from this platform. You will have a lot of launches from Phoenix platform in the next 2 to 3 years. As we keep expanding, Our play from 34 to 65% should be the one way is Bada Dost. Second is partner range of vehicles, which is our medium, let's say medium light commercial vehicle partner. You should see a new vehicle from partner called Partner Air Brake, hopefully in the month of March itself sometime, and going forward in full production in the next full year. Similarly, on the bus platform, which is called Mitra, you should see multiple range of buses coming from Ashok Leyland, from school buses, from staff buses. So between Partner, Mitra, Dost and Bada Dost to start with, these four platforms should attack around 60% of the market. Then you will see another platform coming forward in the next 2 to 3 years. So clearly Ashok Leyland needs to be a good, big player in the market, and definitely we should be seeing a lot of aggression from Ashok Leyland with the range of vehicles, number one. Number two, expansion of network in the full part of the country, and also global expansion with left-hand drive vehicles. So Ashok Leyland as an LCV as a play, today from a stage we were 0% within Ashok Leyland portfolio for light commercial vehicles. This year, despite slowdown, it should be 50% of Ashok Leyland's portfolio by volume will be light commercial vehicles.
Nitin, how is it that you actually see the pie changing in the next 2 to 3 years with consistently growing demand for smaller trucks?
There was a time, let's say, if I have to give you the feedback to you, there was a time Indian industry, LCV as a share in the industry and commercial vehicle industry was only 45% 4 years ago. This year, if you leave the pandemic aside, last year, by the end of last year, it became 69%. That means 69% of all commercial vehicles sold in the country were light commercial vehicles by volume. So from 45% in 2016 to 69% in 2020. Clearly, the shift is moving towards light commercial vehicle for two reasons. One, the bigger trucks are not allowed in the city. Bigger trucks are becoming more bigger, so they drop the goods in the outskirts of the city, number one. The light commercial vehicle picks up the goods and brings to the city. That is one reason, restrictions. Number two, consumptions. India is becoming more and more a consumption economy. That means light commercial vehicle play a role to bring goods into the market. So if you want to track light commercial vehicle as good, track consumptions, track FMCG companies, track e-commerce. So globally, 75% of the global sales of vehicles is light commercial vehicle. India has reached to 70%. I am expecting India to settle down between 75 to 80% of their sale through light commercial vehicle in the next 4 to 5 years' time. It's already 70%.
Sure. So any strategies to shore up margins, any numbers that you could share with us?
I think margin is one subject we don't give a guidance on. But one thing which happens in a margin scenario, I think all of you should be aware, the commodity prices is increasing day by day. Margins for all auto companies will be under pressure because you can't keep passing on the price hikes in the market. So as a guidance, we don't provide. But the only thing I can say, margins will be pressure for all automobile companies going forward due to commodity price increase.
Good to have you on the show, Nitin. We'll let you go on that note. Thanks, as always, for taking the time out.